I'm Neil Krepsky. I work for SAP as a product marketing specialist focusing on cloud solutions for the finance line of business. Don't get scared about the marketing title. I do have a CPA license, and in a prior life I was an auditor for Deloitte & Touche. And I'm also happy to have Terry Rice here from Living Proof, who is the Director of Finance. And today we're going to cover a session called Rules for Financial Revolutionaries, Planning and Understanding the Impact of Cloud on Your Financial Technology. And what we're not going to do is say like what cloud technology is. There's actually been a few really good sessions this morning I attended that kind of covered that. I'm going to cover some really good research and things to consider as you're evaluating various types of cloud technologies to help manage your financial operations. And I'm actually very excited that we have Terry here because he's going to provide his own company's case study and what they've done in the cloud to help manage their financial operations. Terry and I are pretty flexible guys, and so if you have questions, you don't have to tailor them to the end. Just fire away. Okay, great. Let's see. So what I'm going to talk about quickly is there's some independent or recent research study by a research and analyst firm, Saugatuck Technology, that specializes in cloud technology as well as financial applications and technology. And they did a recent survey, and if anyone wants the detailed survey, feel free to leave me a business card and I can get that to you. But it's an independent research. I think it was like over 200 CFO and VP level finance executives of companies of varying size across the globe. A survey on just their thoughts on cloud, their strategies around cloud, and what they're doing around cloud. And it was some interesting things came out of that because cloud's not necessarily new. It's been around now and being adopted for more than a decade. However, in the finance departments, we're probably the last ones to adopt cloud, and probably most likely because of the nature of what a financial department has to do. I mean, we're the scorekeepers to the public, right? And as the scorekeepers, we have to touch every part of the business. So what we do affects everything. So we just can't be a beta test site for a new technology. But what's interesting that came out of this report is we're now at the point of the adoption curve in financials where it's starting to take off. In fact, it's been pretty widely adopted in smaller market type companies, and it's now creeping more up into the larger enterprise. And now finance executives pretty much across the board, and as I've been seeing in the attendance in the breakout sessions of like the cloud related ones, it's on just about every one of their agenda. So what are the key reasons, like a key theme that came out of this survey that finance executives all been saying, like why they wanted to evaluate cloud? It's really about efficiency. I've heard a number of times in this at this conference, they needed an efficient way to do business, but not blow out the budget in doing it. Okay, so it's a way to help manage the growth of their business and take advantage of the latest technologies and solve their core requirements, but in a much more efficient and cost-effective way. It was kind of a similar theme we've been seeing from a lot of companies. And this is kind of an interesting chart. And when I read the report, I was like, wow, I didn't think it was anywhere close to that. This was, of those 200 plus finance executives, they surveyed both where they're using cloud solutions to manage their financials and where they're planning to use it. And I expected like the current state to be somewhere less than 10%. Okay, and these are, again, it's a pretty broad sample size of companies of different sizes and industries. And what I've noted was like they're adopting the solutions in different areas, whether it be a core financial management solution like your general ledger and AP and AR, the typical ERP, or if it was to solve like their budgeting requirements or risk and compliance and internal controls, or a Sarbanes-Oxley type requirement. What I noticed is already, and it's actually more because now we're already into 2013, just for across the board in all these subject areas, the adoption within this survey was over 25% already. And if you look at the end of the curve, which is just 2 years out, pretty much everybody's going to have some level of cloud adoption to manage financials at like an over 70 to 80% rate. So we're at that point in the curve where financials is ready to catch up with what everybody else's other lines of business are doing in technology. Some other interesting points that came out of it, though, is while adoption has been picking up quickly, the typical conservative nature of a financial steward, we're doing it in an iterative approach for a lot of companies. In the late 80s and early 90s, we've all learned some lessons on Big Bang and how much that can scare companies and what's involved in a Big Bang approach. So a lot of companies are taking an iterative approach or kind of a requirement by requirement approach, dipping their feet in the water and expanding from there, getting comfortable with it. But the second point here, more so than taking an iterative approach, the key concern, especially when I talk to customers, is not that we're nervous about using a cloud technology or we're nervous about the security of a cloud technology. The technology is mature enough, we're past that part of it. But they're concerned with it has to work with the rest of our business. Okay, as I mentioned, you all know this, as financial stewards, you're pulling information, whether you're on an integrated system or have a multi-vendor or a homegrown environment, to get your financial statements and be that face to the public, whether you're a public company or not. Okay, you're pulling information from every one of your lines of business and whatever they're using. And even within the finance department, you may be pulling stuff from a budgeting system, from a compliance system, depending upon your industry. So it's not realistic that even if you're going to go cloud adoption, you're going to be able to solve every single one of your requirements within a financial department's chores and duties. And that's beyond being the evolving role, which I hear a lot at this conference, of being able to provide more insight across the business and be a more strategic partner across the business. I mean, that's where we all want to get to. But even before that, probably the number one key concern is it needs to be able to work with what we're using today and not ready to come off, if ever come off it. And so this is kind of an interesting chart. One of the things of how companies are doing, a real emerging trend, and what I see, especially in the next year or two, being really the dominant trend for cloud adoption for a finance department, is a hybrid approach. If you look to how companies' strategy or preference for deploying solutions internally, I mean, right now, or really a year ago, it was still primarily over 50% an on-premise option with some cloud, and then a hybrid type approach where maybe it's a subsidiary running the same group of requirements on a cloud solution, but they're smaller and they need to sync up with the corporate, or if it's a hybrid type strategy where we're solving a requirement maybe for budgeting to then hook up with like our core ERP or on-premise general ledger system. And so what we're seeing right now is really hybrid is being more and more the dominant type of approach. And it's not surprising that the research has shown as the market matures for financial organizations, it's going to be more and more of a purely based cloud option for companies. And again, this is just independent research and things we've come out of. So like one of the most important things I think for everyone in here, regardless of what type of technology or business requirement you're evaluating right now and trying to solve, that blended approach to see how that will blend with what you have. I heard that too in a lot of sessions this morning. Is kind of interesting. I felt like I was colluding with other presenters on our message, but it really is ringing true. It needed to be able to adopt with what they're using now and may or may not come off of. So having that blended approach is key. And this is kind of near and dear to me, this quote here. I'll read it. This stuff isn't something that we want to see pulled together. This needs to be rock solid, and it needs to reflect real-world finance organization and activity. I'm glad I have Terry here to kind of give that real-world perspective. But I've been on both sides of the fence. I've been an auditor. I'm also now working for a solution provider. But at heart, I'm an accountant. Okay, and in talking to controllers and CFOs for my entire career, and I want to counsel everyone in here, whatever it is you may or may not be evaluating, financials hasn't changed. There's nothing that's been revolutionized. You still recognize revenue the same way. You still depreciate assets the same way. You still have to adhere to FASB requirements. Maybe the most monumental things that have happened in the last decade, like you're a global organization, you have to now figure out what to do about IFRS, or in the whole Enron and financial crisis, and it's now like we got to tackle how we do Sarbanes-Oxley reporting. But at the end of the day, I see a lot of positioning out there for a lot of different solutions. We're going to help you change the way you do financials. And just as a fellow practitioner, and it was great. It was in the keynote this morning. The person doing the keynote mentioned, we had the strategy, but to be effective, we focused on the details to meet that strategy. It's still about, you can't, as financial professionals, you can't be a beta site for something and go for something revolutionary. You still got to make sure your internal controls are there, they're compliant, they're efficient, best practices to get your business done. And then those type of efficiencies should help free up time or be able to take advantage of other great innovations to enhance that strategic role across the business. So for what makes a rock solid type of solution or real world solution, I'm not here to give a sales pitch, but just make sure whatever it is you're evaluating, don't look past the innovations, and you'll see great things around mobility or access anywhere, anytime, but you still need those rock solid best practices and internal controls. And so while cloud is a newer type technology, I wouldn't say it's new, one thing about SAP's delivery in the cloud, we didn't reinvent financials. We basically took what we've been doing for 40 years for how we've been delivering our on-premise solutions to companies of all sizes, taking those best practices, the way you do journal entries or depreciate assets, it's all basically the same thing. We're just leveraging a new technology to do it. And we do provide some of the nice sex and sizzle type things that people promoting and really trying to enhance that strategic role. But again, I just encourage you, whatever it is you're evaluating, don't forget the details. It's still a core financial management system you need to run your business. And this is a good point. One of the benefits I've seen in other sessions today of why should you think about cloud? And it's, they talk about the upgrade cycle goes away, it just happens, or it's a subscription model, you don't own it, there's not as big of an investment. And for other lines of business, you can do a yearly subscription, and let's say you don't like the solution, you could turn it off and maybe try something else. You can certainly do that with a cloud-based model for a financial transaction, but we all know that's not realistic. Once you implement a financial system, if you decide to turn it off and go with something else, it impacts everything across your business. Okay? So it's not something that you can just really turn off, and that's why you need to evaluate and be comfortable in the solution you're providing. So again, in a newer business, we've delivered solutions and it's been adopted, it's been tested, and I'm glad to have Terry here, who's basically going to go over his case study. They've adopted cloud in some of our products, and he's going to talk about what that's meant and the experience for his company.
Thanks. Thanks, Neil. You've been a gracious host since I've been here in New York. I'm from Boston. and originally from Long Island, but from Boston, and we had the pleasure of going to a Yankees game last night.
I didn't know if you would like that or not, coming from Boston.
But it was a neat experience. Again, my name's Terry Rice. I'm the finance director at Living Proof. We're a startup in Cambridge, and I'm going to give a little bit more of the background on the company. But in full disclosure, we are an SAP customer, by design customer, and we adopted in 2010. So we've been, May was 3 years on the platform for us. So what I'm going to talk about is, some of it will be a little bit about by design specifically, but also about the cloud and the hosted nature of the product. In order to do that, I think I should give a little bit of a background of Living Proof and the company, actually, because it impacts a lot of what we've done and how we run the business and why we chose a cloud-based solution. Basically, there's a company legend, and it sort of goes like this. We're a venture capital-backed company. Polaris Ventures was among our founders. And John Flint, who is the chairman of Polaris, was getting his hair cut at one of our other founders' hair salons, Mitch DeRosa, in Boston. And he's looking up at the shelf, and you could see all these products that they were selling. And he said, you know, how much do these cost? And Mitch told him, and he said, wow, that's a lot of money. What's in them? And Mitch said, well, there's this and that, and they do these different things. So he said, okay. He bought the shelf full of products, and he brought them back, and he gave them to a fellow at MIT, whose name is Bob Langer. He's an MIT fellow, and he has his own labs at MIT. And he said, Bob, tell me what's in these things and that makes them special. Bob looked at the products, analyzed them, and said, there's nothing in any of these products, hair care products, that does anything that hasn't been around for 30 years. So John said, let's figure something else out that's proprietary. And so that was the birth of Living Proof. So basically, we're high-end hair care products with proprietary technology. And without pitching the product too much, what we have is a company that started virtually from nothing. It was an R&D shop. It was an idea. And now we are, we're experiencing 100% growth over the last year. And we're in major retail outlets, QVC, and also a direct-to-salon business. So our business has gone from 0 to 100 miles an hour very quickly. We haven't reached our full potential, but as we're doing that, we had to have something other than QuickBooks. And so, you know, we started with product sales in 2009. Here we are, 2013. But in 2010, we had to make a decision. You know, the products they're shampoos, conditioners, and so forth, but they're in high-end markets, and we sell through 3 different distribution channels. We sell direct, really 4 actually. We sell direct to our customers through our website. We sell through the big box stores like Sephora. We have a consignment business through QVC, and we sell directly into salons. So very, very different distribution channels, very, very different needs of customers. And we have a product that we manufacture. So these are a lot of different complexities that come into play, and you have to figure out how are we going to do this, how are we going to do it efficiently. And oh, by the way, there are only 60 people in the company, and only 4 people in finance. So how, right? Even though we're in this really sort of a sophisticated marketplace, we were still running the business in QuickBooks and Excel. I mean, that's not a surprise. I've listened to a bunch of presentations, and every time I come to a conference, I think everybody out there has got to be doing more than we are. And I still hear people still relying on Excel and their old systems, and I realize that we're not, you know, we're all in the same boat. So, you know, but we really had a startup environment that hadn't, I won't say there were no controls, right? But the controls were very loose, and it was easy to make mistakes, and it was easy to inadvertently do something that you didn't want to do. So we had to fix this, and we had to fix it fast, because in 2010, when we adopted, we had basically 2 product lines. We now have 5, and the volume of transactions that we're dealing with were enormously different. So we needed something scalable. We needed something that we didn't have to manage on our own, because again, we're only 4 people. We outsource our IT function. We don't have an IT function. We have the function, but we don't do it ourselves. And we couldn't take on an on-premise solution. So whereas Neil was saying a lot of finance companies, finance executives and companies want to do a step-by-step adoption process, we were not in that camp. We had to jump in, and we did. We jumped in, and we swam. We swam like hell. 3 years on, we're in a much better place. I think for me, and this is partly a function of moving to an ERP system. We do everything. We do everything from finance to HR to time and expense, supply chain, inventory management. We took the whole suite of functionality that By Design offers. But for me, the biggest thing that we get out of it is the control, the processes, and the consistency. So that whatever process we're doing, whatever transaction we're doing, they all enter the system the same way. They all reside in the same place. If you stub your toe and don't book the transaction properly, it's going to show up incorrectly in this downstream in the same place. So when you find it and you see it, you know where to fix it. And then that helps you iteratively to build a better process. And when you only have 4 people in your finance department and occasionally experience turnover like any company will, having that consistency is a huge benefit to keeping your life simple and in control. Where personally I've seen, I mean, we've had a lot of improvements, and just to sort of narrow it down, cash is always king. We're private equity backed. We're in our Series C funding, so we have revenue streams and we have products, and we have markets and customers, but we are not profitable yet. We need to manage our cash. Everybody needs to manage their cash, but we weren't generating cash, so we really have to watch it. And because of the way, because you're with a cloud-based solution, typically you're in a multi-tenant environment, which is all the other customers are out there. They're operating off of the same servers. You don't have your own dedicated. Typically, you don't have your own dedicated set of servers and where your data is warehoused. So when upgrades come through, they have to come through for everybody that's on that server, everybody that's in that suite of applications. There are some constraints to that. You can't do a lot of customization. You can configure, but you can't necessarily make it have it brew coffee for you, right? It's going to do some basic things. But what that allows you to do is it allows you to drive consistency back into your business processes, and that's what we've done. We've worked very closely with our R&D function, with our marketing function, and with our supply chain team to really start to treat our transactions the same way, treat our data the same way, so that when it comes through, this part is easy, especially cash. And for me, cash forecasting, which I'm still responsible for, used to be a 6 to 8 hour process twice a month. It was awful. I hated it. Because the data was always in different places. I could never get it. Every time I ran a report, it would never look the same. 2 weeks later, how did that change? Where did something unexpected happen? But now we've standardized the process to the point where I have a staff accountant who prepares the cash forecast, and I spend about an hour and a half reviewing it, and we're done. So I attribute that to partly, good execution, great, Yahoo, we have a great finance team, but also the tool. And the tool has really done that for us. Another area where we've seen huge benefits is in our logistics and supply chain. Now, I know that out of curiosity, is anybody running a manufacturing organization, or are you all service providers, or is there a mix? Manufacturing? Some? Okay. Well, this part I'll go through quicker then, but for us, this has been a huge help. We used to do what's called turnkey manufacturing. So we would give our formulas and our requirements or specifications to a third-party manufacturer and say, we want to 10,000 bottles of shampoo. And they would say, we'll send it to you in 3 weeks. And that was it. That's turnkey. We've since moved, as we've grown and expanded, we've moved to what's called contract fill. So they still mix the product and bottle it for us, but we're responsible for sourcing everything else. So this goes from having, okay, we have 15 finished goods products, so we have 15 SKUs, 15 things to worry about, to now we don't have 15 SKUs, we have 200 SKUs, and each one has a bill of materials. So when I talked earlier about scalable, we went from being very, very simple in the way we manufactured to very, very complex. Because now we have all these finished goods that we produce and all of these bills of materials, and the SAP will allow us to track all of those separately. They all roll up to the point where I've never been a fan of cost accounting, but we actually do some cost accounting now, and we actually look at our variances and try to figure out if our manufacturing processes are as efficient as they could be, if we're spending our money as efficiently as we should. And to me, that's a direct it's a direct result in the fruit of having the system in place, and again, it's all out there, available all the time on the cloud. Audits, audits are, we have our financial audits with Deloitte and Touche. We have our bank audits. We haven't had any IRS audits yet, but the great thing about SAP is because it's so consistent and it's so uniform in the way it treats transactions. What an auditor likes to see when they come in is they say, okay, explain to me transaction, how you book revenue. Explain to me how cost of goods works. And then when they test, they see it work that way every single time, right? That makes an auditor feel good. And we definitely benefit from that in our audit process by using SAP, because every time they ask a question, the data comes out to them the same way. They see the transaction treated the same way every time. And it becomes a very, I won't say painless, but a pretty painless process. So that's what we've gotten so far. And what are we looking for in the future? What's in store for Living Proof? I think one of the things, and one of the really interesting things about, oh, sorry, go ahead. Right. Well, I think the decision process was, it's a good question. It was a lot like we were at a session this morning where a fellow was talking about host analytics. And it was very similar to that. We did not have the resources to manage an on-premise solution. So in some regards, and I realize that's sort of like a bright line test, we could not go on-premise. I guess we could have, but there was going to be no support to spend that kind of money hiring headcount for those purposes. So once we knew that unfortunately, cloud technology was out there, we looked very quickly at what was being offered to small companies and a hosted solution. There were a couple others. I don't even remember what the names are anymore. But by design, quickly rose to the top because for us it provided the entire ERP, the Enterprise Resource Planning solution. So we were going to do finance. We knew we were going to do supply chain and logistics. Of course, it has time and expense. We can do payables, receivables, revenue, everything. We actually do our earned time off, so vacation planning and so forth in SAP. So, and the price was right, quite frankly. It's subscription-based, and the fellow that was speaking this morning about Host, he said, I don't know. I signed a contract now for an on-premise solution, and I don't know what's going to happen for the next upgrade. I don't know what it's going to cost me down the road. I know what SAP is going to cost. I sign a contract every 2 years, and it doesn't change. And I get the upgrades, I get the functionality, and it's done. Now, if we were a 1,000-person company, with $1 billion in revenue, would we make a different decision? Maybe, because you have more economies of scale. But for a small to mid-sized company, it was a very easy decision.
This is really a new market for SAP, but they weren't on my radar.
Yeah. Well, I don't want to make it a sales pitch, but I know it was new back in 2010. Yeah.
Like we've always, even in the on-premise world, we've always been in the mid-market. I think you'd be shocked to hear like some of the stats, and that's even with on-premise solutions. The problem was, though, there was a lot of pain that went along with that for a smaller sized organization. And even though, like in Terry's case, they adopted business by design. You know, they're a growing company, and it made a lot of sense. The big bang approach, that's what they needed. It's kind of, we're doing the same thing in the larger enterprise, but at a smaller scale, meaning, for example, you're not going to get, and not that they're a customer, I'm just throwing a name out there, you're not going to get Coca-Cola, whatever they're using, to drop their on-premise system and go big bang, but they do acquisitions all the time. And they have subsidiaries, and they need to work with corporate headquarters, and they need to do it right away. You know, and so getting them in that type of culture at a subsidiary to adopt on-premise, there's a lot of pain with that. And so even in large enterprise, they're adopting like things like business by design, or even just subsets of it, just maybe in some cases the core financials. So that's kind of like the hybrid approach. It really depends on the need and culture and where a company's at in their life cycle. But it's kind of I wouldn't say it's a new market for us, because our stats, when I first saw it too, the majority of our customers are actually mid-market, even in the on-premise. But I think the palatability of accepting a solution to help them make their needs, cloud fits much better.
Yeah. For me, I mean, how are we doing on time? Do we? Fine. So for me, there was. It wasn't so much. It's funny. The title of this session, right, is Financial Revolutionaries. I don't really see it as that. I think that this is about survival, right? The pressures that are on our businesses, that are on our functions, are relentless. I mean, you all know that, and we have to. It's a tired expression to say we're going to focus on our core competencies. But fundamentally, as a finance professional, I have no core competency in data security, data management, or IT. Even though in a lot of companies, IT falls under a CFO's portfolio, what is our real core competency there? And so, my personal feeling is that for a company of our size, there's far greater, and for a lot of companies really, there's far greater risk to your financials and to your corporate structure and your competitiveness to continue to manage those things internally, to try to be an expert in all the security and integrity issues that you have to manage, than to rely on whether it's SAP or any other hosted provider, who that is what they do. They manage those functions for their customers, and they have dedicated teams that just focus on that, and that's their core competency. So it's what cloud or not cloud. I guess it's where you are and how you view those challenges. Very quickly, what's in store for us? As it relates to the cloud, I wanted to just touch on our third-party logistics integration, because one of our biggest challenges today, having grown, and we've got our financial house in order, is we spend far too much time processing orders and dealing with the physical movement of goods. We actually use for our warehousing efforts and shipping, we use our third-party warehouse providers' software to process orders, and then we push that data into SAP. It makes no sense. It should be the other way around. We should be managing all the data in SAP, pushing it to our third-party logistics provider, and then taking it back. And so one of the things that we like about SAP is that it has a fairly open architecture, and we're going to use probably a middleware provider to bridge that gap and integrate our third-party logistics. We're expanding internationally, and SAP is going to be very useful in helping us to analyze those opportunities. And just thirdly, for anybody who went to the host analytics discussion this morning, we're actually adopting host analytics. I think host analytics is a SAP by Design partner to move into forecasting and budgeting and to do more in that area as well. But there was a whole nother session on that this morning. So hopefully that gives you a little bit of a sense of how a company like Living Proof views the cloud and in particular SAP by Design.
And I want you also to know how lucky everyone is today, because you could see the slide there, Jennifer Aniston, their spokesman. I actually had her line up to speak, but when I heard we could get Terry, a financial practitioner, I jumped at the chance. So.
I sort of glossed over that, but we, on a company milestone, we signed Jennifer Aniston as our celebrity spokesperson in October of last year, and that with some recent product launches has essentially doubled our business in the last year over year. So next year is going to be tough to see what we can do on top of that, but right now things look good. So.
Any questions?
No? Everything was perfectly clear.
Okay, well, thank you.
Oh, you do? Go ahead. So it was ridiculously fast. I want to say it was probably 2 months. Bear in mind that our situation was every situation is unique and no situation is unique. We were using QuickBooks and we were doing actual costing for our product. So every batch of product that came in had its own cost and we were trying to track that. So we had to not only get the system up and running, but we moved to a standard costing process, which, so it took about 2 months, but the 2 months went very fast. I mean, and we closed our books. We went live cold turkey. We stopped QuickBooks and we closed the books that first month in May, and it was a mess, but we fixed it. We're a private company. We took advantage of it. We fixed it. It got better every month, and now we close in about 10 days, but that's out of luxury and convenience. We could probably close in about 5 days if we really wanted to. No. It's proprietary, but we don't make any organic claims. No. Oh, well, yes, a lot of people do it. So, thanks.
Thank you.